Let's talk about arguably the most important consideration when selecting a broker: who regulates it. I know you're a trader, not a lawyer. So I'll distill the information out there and present the most salient points. Here are some crucial areas that regulators enforce. Segregated bank accounts for client funds and fund protection schemes so you can withdraw your money if the broker goes bust. Negative balance protection so your losses don't exceed your initial deposits. Anti-money laundering measures. Prospero Markets was recently busted for money laundering, and thanks to ASIC oversight, client funds will probably be returned. Trading conditions, such as leverage restrictions and margin stop-out levels. And finally, when your broker's customer service falls short, you want a regulator to complain to. Not all regulators are created equal. In general, there are two tiers of broker regulation. At Tier 1, you have the government-backed regulators. Some prominent ones include America's CFTC, UK's FCA, and Australia's ASIC. These regulators impose the most stringent requirements. For example, under ASIC rules, leverage in forex trading is limited to 30-1, unless traders are classified as professional. The capital requirements for license application is $1 million, and aggressive marketing in the form of bonuses and giveaways aren't allowed. Next in line are the long list of offshore regulators, usually in countries with nice beaches. They generally have the same list of responsibilities, but requirements are far more lax. Leverage and marketing restrictions are almost non-existent. Some brokers offer leverages as high as 10 million to 1, which is a great way to blow your account. Marketing tactics like contests and promotions, which often promote over-trading, are perfectly fine. Most importantly for the broker, capital requirements and application fees for licensure are much lower, sometimes only a few $1,000s. And they pay far less corporate taxes. It's easy to see why many brokers prefer these offshore licenses, and the vast majority of them have at least one. As a retail client, you need to understand one key difference between the Tier 1 and 2 regulators. Tier 1 regulators are independent, government-funded, and their mandate is to protect the public. Tier 2 regulators are hungry for foreign investment and are being paid to regulate their paymasters. I'm not saying they're useless, but if you raise a complaint, the conflict of interest is obvious. Now let's talk about a very common tactic that Baby Pips calls regulatory arbitrage. Many regulators have a combination of Tier 1 and Tier 2 licenses, for example Go Marketeer, which has an ASIC license, together with licenses from Mauritius, Cyprus, and Seychelles. Does this mean you have 4 regulators, including ASIC, covering your back? No. You are assigned to one regulator, usually depending on your country of residence. For example, you can only be regulated by ASIC if you're an Australia resident or have an Australian bank account. In the past, ASIC has made it abundantly clear that their regulations do not extend to overseas clients. Chances are you won't find a Tier 1 regulator willing to regulate the world. They have to look after their own people first. If your broker allows you to choose your offshore regulator, there may be differences in leverage and trading costs, but probably little difference in protection. So here are some tips when choosing a broker. Your safest bet is to choose a local Tier 1 regulated broker. For example, if you're living in Australia, choose an ASIC-regulated broker. You will get the best protection if you, the broker, and its regulator all fall under the same jurisdiction. If this isn't possible, for example due to residency issues, choose a broker with a mixture of Tier 1 and Tier 2 licenses. I personally do this. Most brokers have at least one offshore license because it lets them offer much higher leverages, which retail traders seem to love. Your broker is less likely to go rogue if at least part of its business is well regulated. For a quick overview of each broker's licenses, check out my FX book or Forex Peace Army broker reviews. If this still isn't possible, you have the purely offshore regulated brokers, but don't hold your breath if you ever have a complaint. And finally, you have the unregulated bunch, or brokers that are merely registered in an offshore location. Some sneaky brokers have registered in St. Vincent and the Grenadines and tried to pass that off as regulation. SVG's Financial Services Authority has got so many complaints that they now have to openly declare on their website that they don't regulate forex trading. Remember guys, registered and regulated are different things. Once you have selected a broker, deposit a small amount of money, place a few trades, and withdraw the money. If they start asking questions, or the money takes too long to appear, pick another broker. Most importantly, never settle for a poorly regulated broker because of promotions or marginally lower costs. It simply isn't worth the risk. There are plenty of brokers out there. Take your time and choose wisely. Leave any questions in the comments. I'll try to help.